Okay. Thank you, Marlon. It is 5:30 on August 30th. And as I have emphasized a few times in the last couple of weeks, this is August trading. This is what it looks like. It is low volume, it is slow, it is generally low volatility. I personally try very hard to get to the pool, get to the beach, get off the desk, get away from the screen, clear my head, and take advantage of this. And I really encourage anyone listening to do exactly that. As I said, I come in, I do my usual morning routine about 7:30, 8 o'clock, watch the screen for a little bit, and then by 10:30 or 11, I am done for the day. That's not how I trade year round. This is just very specific, and yeah, that's what I would encourage everyone. So we have that to talk about. I think tonight's broadcast is going to be pretty short, but we do need to talk about gold. That's in the headline. And also worth mentioning, we are coming to you from the pit room at Mr. Top Step tonight for the first time. We're trying something a little different. This is where we offer an array of our services, and there's a number of really good traders in here who talk about different aspects of the market. If you're looking to learn, this is a great place to do it. So me, I just come on here on Sunday nights and try and give context and tell people how I'm thinking about things for the week. And we're going to change it just a little bit, but not till after Labor Day. A couple more specific, more actionable ideas, and point to a couple of things that I'm focused on. But again, this is a swing trading perspective and just a little bit longer term. If you're a day trader, I hope it's still very useful, but I do think about things in a longer term. And it's worth mentioning, me and a couple of my trading buddies were talking this week, and extending our time frame has really helped our performance. I don't know if that's because we're a little older, a little more established, or I'm not sure what it is, but that was one of the things that we were talking about. Okay, let's get into the specifics. I already talked about this. Trade accordingly. I think I say that a couple of times in here. And this particularly, usually, I think Jackson Hole is a little closer to Labor Day. We've got a full week in between there. And I really think it's going to be very quiet. So, enough about that. You can see this is the daily chart. We had our push to new highs, and then this, I called it just a drift down, and did say that I thought that this high volume area, I think a node is a single one, but some people dispute the terminology. Come in, and this did service support, held out there for a couple days, and then started pushing higher late in the week. On the shorter term time frame, this is what I'm talking. I don't want to trade this. Some people can. If you're a day trader and you can trade this, good for you. I cannot. NQ is a little bit more to talk about. This is a pretty decent support level. I'll look and zero in on the 60-minute chart. Usually I do 30 minutes for the detail, but this has just been consolidating long enough it wouldn't be on the screen, and I think the whole picture is relevant. But this right here is a pretty important level. You can see, and this is a trading range, and this also is a pretty important level. This is a failed breakout we talked about last week. We're right in the middle. This is a hard trade for me, so I have no plans on doing anything here. RTY got hit a little bit on the shorter term. This happened like right at the end of the day. I don't know. Yeah, that was non-options expiration. I don't know what happened here. There's a little thing. I'm very curious to see how we trade right at the open and into tomorrow, if this was more like a bad tick. I don't care about the 50-day here. I do care about it periodically, but just it's almost sideways, and going sideways through a moving average doesn't mean much to me. Okay, we're going to get started. We're going to talk about gold in detail in a couple of minutes, but this is Kevin Warsh on Friday. Historically, he talks hawkishly, but he also, he got the job and he petitioned for the job, speaking to Trump's wishes that, Trump has been very vocal. He thinks rates are too high. Why can't they come down? I think he said GDP could be like 10 to 12 times higher if we could just get rates down. I'm not sure where he gets his economic information, but we'll leave that there. Can we accept over this level? We can go up and go right back down. It is definitely a level, but pushing through doesn't mean we're running higher. So I'm very curious to see how much staying power this has. I think this is going to be a big vote of confidence on Warsh and his credibility. He said what he had to do. We're coming into Jackson Hole, and he said short-term rates are the most effective tool, and possibly rate increases could be on the horizon. And that led to this. And we'll talk about gold in a minute. But I don't see what else he could have said. He's not going to come out and say, "Hey, I'm going to let inflation run hot. I'm not going to do it." He said exactly what he could. So this suggests to me in gold particularly, I think it was just a crowded trade. Gold I'm talking about because we'll look into that in more detail. But this is the response in rates. You can't even see it. Okay, this is 10-year, and he was talking about short year, and I didn't look at the short end of the curve. But he did not jawbone the curve. I'll tell you that. And he couldn't have said anything else. So again, I'm not terribly impacted by this. Overall view, just we're meandering, coming back, and we're just digesting, excuse me, that move. And now we're just consolidating the highs. Very healthy, not concerned. But as I spend a little bit of time, where was it? I do want to talk about this. If you have the charts, and I will throw it in the swing room, and I already emailed it out, but I'll be sure to throw it in here. It's a link. Dylan Radigan, who used to be one of the CNBC spokesmen, did a pretty interesting article about the bond market offering a check on kind of what DC is doing, and if they don't believe it, they're not going to buy it, and it can be a very disciplinary action for the markets. And it was an interesting read. And I'll pull a quote from there in just a moment. But I would encourage you, if you're thinking and worrying about rates, it's a good read, and it'll be available in the swing room. Yeah, where did this? We're just consolidating. It's still healthy. So get onto this. Again, these are all the things. Look at that. That's a consolidation of the high. It looks very healthy. Going sideways after this kind of a move. Great. Russell 1000 growth. Nothing too concerning. China, I'm going to talk about this again. I like to highlight these areas on the profile on the, I call it the histogram. Profile is slightly different, but the strength of how important this range is, it stops here to the penny. That's not a coincidence. We couldn't quite make it to the high end, but we'll look at oil in a minute, and that seems to be trading very according to this as well. I think it's very relevant. Again, I'm skipping through these. I don't think there's a ton to say here. The low volume, there's not a lot of activity. I don't see anything like, hey, this is a great buy, this is a great sell. Again, though, I will point this. Look where we start to seem to be pausing, right at that histogram. Stop there, stop there. We did have that push up through there, but I don't think that's a coincidence. Not making anything of that. Not making anything of that. It's too small. It looks supportive. It looks healthy. It's been this way for months, and it's generally upsloping. If breadth changes, I'll call it out, but that's not a change. This just says rotation. If you remember what this looked like last week, healthcare looked all great. Tech got a little beat up. Now tech is strong and healthcare is weak, and everything else is mixed. This is it's consolidation, it's rotation. We're just kind of cycling through. Let's take little profits, here. Let's buy them here, and then tomorrow we'll switch around and do it again. No real takeaways this week. Crude, I talk about how strong these levels are. We came down, we pushed through it a little bit, but now we're back above it. I do keep looking at this zone, which is very powerful on a longer term chart, as the probable target. Okay, doesn't go in a straight line. I still think there's a good shot there. And this, to me, I say I'm going to start calling it out. That looks like a pretty good risk reward trade. I think your stop is here or maybe below right there. So what is that, $83 or something? Let me pull it up over here on the side. 79. I'm sorry, I'm off. So this is just about 80 right here. So yeah, if you put a stop at say 79, 50 or 40, and the target is, in the 90s, and you're buying it at 83, 74, that's about 2 to 1, a little more than 2 to 1. It's not quite as good as I thought, but that's not bad also. Again, I'm going to call out the histogram. This is Brent. The seaborne crude held really well in here, pushed down below, but as soon as it recaptured this level, that was my entry here. And I did take profits, about half, I think, and I tightened my stop up. So I got taken out right there. As you said, I'm not taking this move back down. I'm flat right now. I would like an entry. I don't see an entry right now. I'd love to get long again, but there's nothing to do right here. So that's the discipline. Again, natural gas, we talked about the shoulder season. I did post it. If you're not familiar, it's in the comments of the last week's YouTube video. but it has to do with injections, and it does, they start sending natural gas in different directions than they do in the winter than they do in the summer, and it's kind of they take a few weeks and reallocate where the gas is going to go, and that's where I think we're going to get a real good view, and that's when I think this could become a trade again, just about a month from now. And gold, finally we're here. So it took just about 10 minutes. This is the big level, and as you can see, this got hit pretty hard. I think this is $150. I looked at it. I was long going into the number, and not the number, but his comments. I thought it would be interpreted differently. So, and I did not have an automated stop in place. That's okay. We were down 45 bucks. All right, hang on a second. Let's do this. This will help. 5 minutes. And yep, that comes in. So this is Friday, and this is him coming out in his comments, and it's very easy to see. I didn't catch the push here, but we had this push down, and then we had this rally. So this, we were down, I think we were down about 60 or maybe even 70 bucks here, and we were down about 45. And I was looking, I was like, oh, see, they don't believe when it's coming back. And I got out right about here. I was like, oh, we're rolling back over, and I don't think it looks like we're not going to rally. I did think it was a very distinct possibility, given just kind of the dynamics around the speech, that okay, we hit it, took some people out, triggered some stops, and then get back, and like, okay, we don't believe him. This is okay. He said the right stuff, did the right stuff, and I think this is much more. This was a crowded trade, but I did stop out somewhere right around here. And avoided all this, and I put a little bit back on right here. I'm not willing to get long. I am trying to value buy the dip a little bit, but the real takeaway here is, well, we'll get this back off the screen. This is a big level, and I want to see if we hold this level. I'm still bullishly biased. I could see us drifting down, doing something like that. I could also see us moving back up towards the highs a little bit. I think, I don't know if you remember, I did say that my process said I should take some off here. That was a discipline, as I talk about with this histogram all the time. I didn't. I rolled the dice, and I lost this one. That's okay. Very manageable size. And I'm looking to get long. Here's my stop, though, and it's going to be just below this, where we kind of push below. If we get though and accept or do anything down here, then the dollar's working out differently. The trade that I'm focused on is not playing out, and I will get out. And I did dodge pretty close to $100 of downside there. It's not great on a $4,000 security. This is very important. This is the rest of the weak dollar plays that I highlighted. And look at what didn't happen. This is copper. Okay, this is gold miners. That's a little hiccup. Gold got hit harder. Silver got hit pretty hard. Silver's volatile. That's going to get hard, but still not bad. They're holding up. And then energy, just, kind of barely a hiccup. Other weak dollar plays are not voting with their feet, if you will. War still has to prove himself and say, hey, I really am going to raise rates. I don't care what my boss says. I don't know if it's boss, but I don't care what Trump says. I'm going to do it right in there, and I'm willing to take the heat for it if that's the case. I will believe it when I see it. I'm definitely skeptical. It's not meant to be a political commentary. All of this is analysis and what I think will and won't happen, and we're all just trying to make money. That's all any of these comments here. I don't mean to editorialize. So that's really it. And this, Bitcoin and here, this one went all in a day, and this one's volatile. If people don't believe it or think the weak dollar trade is off, this should have come back a lot more. There's a few votes here saying like, nope, we don't believe them. So I just definitely want to wait and see. Close to wrapping up. We'll go do the routine because I think it's important. Energy still looks good. Refiners look great. E&P looks great. And the major, Chevron, that's doing okay there. Technology. What I thought was interesting was this, a little rotation away. Semi's been leading forever, and software's been taking on the chin. All of a sudden, software is ripping right when semis are coming down. Okay, interesting. Just notable. There's a couple ways that could be interpreted, and I'm not sure which way to take it. Consumer discretionary, fine. XLI, I did call out. This might, whoops. This might warrant attention because we're coming down to support that's not on the screen. If we accept below, not much more below here, the picture's going to start to change. But overall, all these still look very healthy. This one I just have one eye on, and we'll wait and see how it goes. I think we're close to wrapping up here. 15 minutes. That's just about perfect. As always, happy to take questions. I will walk through this. This looks good. This looks good. No real change here. And this is it. I talk about it. Kevin Warsh did do his job and jawboned rates given the dollar bit and holding gold. It's not like you had a choice. Well, they follow through. That's the summary. That's the summary of this week. Okay, again, I started with get outside, go to the pool, go to the beach, enjoy the weather. It's going to snow way too soon. I still think that's the case. Enjoy yourselves and good luck this week. We'll call it there. Have a good one.